Hello everyone. This is Juan Sarmiento and today is Friday, August the 6th. I have a bunch of candidates here. I have to be honest, not much uh, was good for trading. Let's go quickly through them. TXN, I see here that Texas Instruments, I think. Anyway, you can see that it says do not trade. The volatility is quite high in the back month compared to the front month. So that's sadly it's a big no-no essentially, because the point is to make sure that there is a volatility approximation between the front and the back month. Otherwise, it's going to be more difficult to make money. They did beat the expectations by a wide margin, and everything else seemed okay. Good liquidity and all that. Let's take a quick look at TXN here. This is just as an example, okay? Just so that we're clear that this is the trade and it's just not good. Let's take a look at the chart. You see that the stock is moving pretty much in a triangle mode, or a flag, or a pennant as they call it often, and that would mean that the stock could move strongly in either direction. So in that sense looks all right, but it's really not moving strongly higher, which is usually what we want after earnings. Here's the earnings. It moved very strongly on that day, but since then it's just not doing much. Okay, not that that makes any difference. What we care is that it moves strongly from here on. Let's go to Texas Instrument. No, this is, I'm sure that was Texas Instrument. TXT is Textron, I guess. Textron, yes, incorporated. This is reaching new highs. Volatility is dropping. That looks good. The earnings, they beat by a wide margin, as you can see here. Let's take a look here. Great difference between the expected and the actual, but unfortunately the volatility skew is high, and most of all the liquidity is not good. 6% between mid and natural. That means that you're going to have trouble getting in and out of the trade. Other trades potential, FFIV, same problem. Okay, volatility and liquidity. The HR, we already have one of those, and AMAT, it says do not trade. Again, volatility skew not good. This is rather low volatility. Let's copy this. Let's take it here so we can see it, and then analyze trade. There you go. It's the volatility is very high in the back month compared to the front month. If you take a look at the chart, is recently, no, that's Tektronix again. AMAT is the one that I want. AMAT. Okay. Yeah, okay, here it is. The volatility in the front month, that's not what I want. I want something like November. I think I abandoned this trade and didn't record this properly. We want to say November 3rd or November 10th, or rather September. And the volatility is about 35. When you take a look at the chart, Applied Materials, they are going to be reporting earnings very soon. So we want to avoid that. Why? Because with the earnings, volatility would drop. Okay, so I'd rather wait until the earnings come before I enter the trade. Okay, that's all. I just wanted to go quickly through them to give you an impression of why I do not have candidates today. It doesn't mean I haven't looked, it just means I didn't have good candidates. All right, let's quit that, save that and quit, and let's go through our current positions. we have a 35,000 buying power, so we could have had three or even four candidates, but not to be. Let's arrange these candidates by alphabetical order and go to Adobe first of all. Adobe has been performing great. Let's take a look at the Analyze tab and look how up here we are. And I see that we have August's puts and calls. We need to roll only the calls. The puts will expire worthless, and then we can sell if it's worth it. The September puts, I obviously already sold one, so that's what you need to do. You can have both, because it's so out of the money that if I was going to buy back that put, it's much less than what I sold it for, but it's still, you can still sell it if you haven't yet. Sell the puts, and then the August 6th put is going to expire by the end of the day. So you can do that because it's expiration day today. You can do that. You know, you have one put and one put, that makes two, and I have two longs, so they balance each other. But this put here will go away, and that's our trade gonna be look like this. Okay, it's looking like this, and now we're gonna roll the call. Roll to September the 3rd and get $2.67 in credit. And that is what it would look like. Now you can see that it's all 590, and the strike price here, meaning the current stock price, is 630, well above our strike price of our options. So we could roll the call. Look at the chart. Yeah, it looks like it might top out here, might go a little further, we don't know, but I say it's a good time to take a little profit, wouldn't you think? Okay, so how do I do that? I just simply analyze rolling. This is not the trade, I'm just saying analyze rolling, and we're rolling only one call, 590. We're gonna have to raise it to 630, which is the current stock price. Well, you can roll it up to anything you want, but 590 sounds good. And then change the date to the same as this option you are selling to take the profit. And then look at the negative delta here. That's okay. You can go a little higher or a little lower, like that. Let's put it 30, and because I'm also rolling that call, and that would make it more bullish. If this fills first, this is what it would look like, very delta neutral, which is what we want. Okay, without this rollover, it will be delta negative. I'd rather have it delta neutral. Okay, we just have to make sure that both these trades fill. The one that is going to give me the most credit is the roll up from 590 to 630. Okay, let's do that, and I will make sure that they get filled before the end of the day. Let's go to DHR. DHR, we have August the 20th and August the 20th. That would be 14 days to go, so there's plenty of time to do the rollover. Let's look at the risk profile again. I did a rollover from roll up from 260 in the call to 310. Again, remember, that's a way of taking profits. But now my deltas are positive, which means the stock has been going up. Yes, sure enough. You can roll it up further, or you can do something else. Okay, my call is 310, as you can see. What I can do is sell a higher strike price. This might be or might not be useful. Let's see. We could sell the 320 part of the Adobe field. It might roll up. Okay, so 320 gives me $2.95. Okay, without it is $24.92. With it is -1, which is fairly delta neutral. Okay, take a look at the chart. Yeah, this stock could drop, couldn't it? Look how far away from the Ichimoku cloud it is. Okay, so let's confirm and send and get a little money out of it. And there it is, filled. And now it looks very, very plain. Okay, we have taken our profits. Who knows, perhaps the stock drops rather significantly, and then we can make further money on the downside. If it continues to go up, we might, this delta negatives will turn to positive and make me an additional little money. But in essence, we have closed the trade because it's so neutralized that I don't expect to be making big money unless there's a strong move in either direction, perhaps better to the downside. Let's look at Facebook. This is all we have left, is this. This is just a long strangle. I mean, there's no point in keeping that. It's a $3 trade. Let's get it out because it's not likely to go in either direction that strongly, okay, to make me money. So let's just get out of it. And we are out of Facebook. You can consider re-entering if the stock continues, volatility continues to drop or whatever. The earnings was here, was, well, it went up in advance of earnings and then collapsed quite a bit. But now it may go up because it went up on sympathy with another, I think it was Twitter. Yeah, let's move on. It doesn't matter. Let's move on to HCA. Okay, this stock jumped after earnings and now it may break out again. Let's take a look at the chart. Okay, this is what it looks like, and it's expiring August the 20th, and that is 14 days from now. And the risk profile looks like we are making money here on the sideways, so I'd like to just change it to make it a little more volatility dependent, because this you expect the stock to make money only if the stock moves sideways. So I'm gonna just roll it a little earlier than usual. Okay, that's okay, you can do that if you want, or you can just let it ride on the sideways, no big deal. Okay, CarMax, nothing to do here. September the 3rd, there's plenty of time for that. MS, Morgan Stanley, August 20 again, there's plenty of time for that. I'm not worried about the shape, it's perfectly fine. Nike, okay, Nike, all right, we have August 13. Okay, Nike has been doing great, but I think it's time to take a profit. So one way to do it is to sell one of my calls. I have 3 long calls and 3 are negative and 3 are positive at 150, so they cancel each other. So we have 3 long calls here and we don't have any negative calls, so we can sell one like this. Let me just show you. If I sell one like this, it neutralizes my delta just a bit. Currently it's 103, that's equivalent to 103 shares. So if I sell a little bit, then it comes down to 35, neutralizes a little bit. Again, that's a way of taking profits. Or we can roll it up as well. And in this case, I'm rolling it up to 175. Notice that I'm rolling only 2, which means that I am selling one, and that neutralizes my deltas. See, instead of rolling over the entire 3, I'm rolling 2 up and I'm selling 1, and that gives me more money back into my account. So when create duplicate, confirm and send, you would see the amount 2480. That's how much money I'm getting back by doing that. Then PIPL, that's PayPal. Oh, that's been doing well on the downside. I think it's probably time to go. I think it could bounce and make a double top. Okay. I'm selecting this. You see where I have the 280, 280, 280, 280, right? And one is the 310, which I rolled up. We can sell that separately, okay? But I could close all the 280s, and by selling that long call here at 310, we get out of the trade, okay? I think we have made good money on that, I think. Account statement. Where is it? PAP. Yeah, $520. Okay, it's not big, but it's good. Okay, let's close this by closing all the 280 in one single trade. Notice that I have only one leg is two puts. The rest are 1. It will be filled anyway. Okay, that was Nike got filled as well. Okay, and then let's send this long call as well. I just have to make sure that they get filled by the end of the day. Okay, that's sold very quickly, and this is a little more complicated position. We may have to sell the put side and then the call side separately. We'll see. UPS, all right, this is 313, and we have 1 week. Let me see what is happening here. Oh, I have the impression that the stock could go lower. It's now under the Ichimoku cloud, is turning red. The stochastics is oversold. How about earnings? They had great earnings, but it went down anyway, which is sort of disconcerting. Okay, in this case, I don't care if it goes up or down. The deltas are negative, okay? We can sell one of the puts here, and that will neutralize the position completely. One. And this is what, well, more than neutralize, it becomes bullish. Delta positive, so I'm not going to do that. You can roll it down. You see, you have 2 negative puts and 1 positive, 1 short, 2 short, 3 long. So we have 1 long put that we could roll down to 190. Let's see, 1 of them. Okay, 20. These are just ideas that you can see how I'm thinking. My idea is always to take profits whenever possible. And here, we are going to roll it down to 190. So we're selling the 200 and buy the 190, and that gives us a little credit, neutralizes our position, which means we don't care if it goes up or down. That's it. And August 13, that's next week. And then after that, we have the 2. Yeah, we might have to get out finally. But by doing this, we are neutralizing our position, then we don't care so much. Okay. And then, okay, that was UPS, neutralized completely. Let's take a look at YUM. September 3rd and January 21. There's plenty of time for that to work out. All right, that's all for today. Thank you very much for joining me, and until next time, bye-bye.